All right, welcome back for another episode of Carnivore Trades. Today is Tuesday, November 8th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, we had some serious action today. So members got this on Sunday. I said there was likely going to be a turning point or a major cycle pivot coming up this Tuesday. And that detail, that material is covered in the cycle's course, by the way, which is going to be going up in price. I'm thinking probably around the 15th. If you want to get in on that, get in soon before it goes up. I cover all the stuff that helped me make that prediction, but a lot of it having to do with that eclipse that we got today and the full moon. These are known events around certain cycles, and they can cause these types of reactions, believe it or not. Now, what actually happened here? So FTT token crashed. Everybody's, I'm sure, aware of that by now. This morning, though, they kind of they talked about they got recapitalized. Everything was fine. Market was floating up, and I mean, it was floating up. We were at, I think I can't remember. It was around 1 o'clock, and we were only at like 24 million shares on the spiders. It was it was dead. It was like a holiday, Black Friday, where it's a half day. That's how light the volume was. Then all of a sudden, we had nothing short of what I would call a flash crash. But the strange thing is it came on very low volume here. But we had, flash crash, and there was 100% foul play going on. It is not a coincidence. Do not think for a second that this was floating up on low volume for no reason. And then all of a sudden, somebody liquidated when there's talk of massive liquidations going on in the crypto market. And let's take a look at that. So we'll look over at Bitcoin. Usually we save the coins for the last, but we got to talk about it now. This is at the forefront of the news. So down, it's bouncing off the lows. We're at that 18.5 handle right now. Ether at 13, and take a look at down 13% there on the day. Doge down 20. What a pump and dump. So we talked about the squeeze or whatever that was going on. You think that somebody needed to exit? You think somebody maybe knew what was going on here, and they needed to get out somehow? There's a lot of stuff going on today. So Litecoin down 15, XRP 13, Solana down almost 20. That's a little bit off the lows here. Cardano 7, Luna all getting crushed, and then of course FTT is at the major support level of 0. So that one's holding the lows for now. But yeah, this is definitely, it was beyond. So let's flip back over here to the spiders. This is totally a backdoor exit, like a highway robbery. They slammed it down, and then it floated right back up. That was, they floated it up so that they could hit it down, and that's really all they did. They just needed to get out. Somebody did, and I'm sure a lot of other people got screwed over, but that's just kind of the nature of the game. And what this means right now, specifically, I mentioned this a second ago, but if you look at the spiders here, it's 4:15 p.m. right now. Take a look at the volume. This is including after hours, 83 million shares. It's not a light volume, but that's only because of the last, 2 hours. We're still not even at daily average volume here. It's very, and I mean very rare to see this type of price action, 5, 6, that's almost an 8 handle move, 378 to, 385. Yeah, it's at 8 handles, or so 7 handles on the SPY in a little over an hour with, a catalyst of about 2 million shares and then another, 4 million there at the low. And then the volume just really dipped down. That's very rare, so incredibly rare. What this means, though, is that liquidity is really drying up. So it did not take a lot of capital to move the spiders 7 points. That's not healthy for the market. And overall, what this news means for everything is that nothing's changed as far as my overall analysis. I know generally, but for the most part, my kind of usual video that I go through has kind of been derailed today because of what's going on right now. But the liquidity here, so nothing's changed, but the liquidity that I want to talk about is, again, the Fed has already warned about this, and I think we're starting to see it here. So it is low liquidity in the Treasury market. Of course, that spills over to equities as well. just not good stuff. And again, nothing's changed here. So spiders on the daily, inside bar. It's just, you can make a case you have a bear flag there. You can see the same thing really on the Russell. So ever since that rising wedge breakdown, now we're bearish inside bar after that rising wedge. Triple Qs here. Also bearish inside bar below all 4 major moving averages. So market is lucky right now, if you ask me. I mean, this is, especially the Qs, this is in a very weak technical position. I mean, this is holding on by a thread here. And the fact that it managed to scratch out with a gain here is pretty remarkable. Take a look at volatility today. What was the title? What was the thumbnail of yesterday's video? If you caught that, it was just said complacency. And I mentioned this yesterday. Why is the VIX getting hit so hard before the election? Wouldn't you want to have, and not only the election, but CPI on Thursday? And investors were just peeling back hedges, peeling back volatility, and it's almost as if they probably shouldn't have done that. So now we're getting close to this trend line here. You can see the classic VIX falling wedge. We hammered on that trend line today. It got rejected. It did close back down. But this is getting into this kind of zone here. It's going to have to break. If you're not going to break down, you're going to break out. And usually a falling wedge is a bullish reversal. So that's kind of what we're looking for. Yesterday, we also mentioned this with the dollar. Notice how this level on the dollar coincides. You got the 100 MA there, this bull flag channel. That coincides with this level on the VIX. So if we're, let's say we're sideways tomorrow and on the spiders, and we bear flag for one more day, and we go into CPI and the dollar index is into this area and the VIX is into that level. I mean, generally don't get setups any better than that. So, yeah, wild market. Not good to see the signs of liquidity drying up. It's very rare to see that. I mean, very rare, guys, to see that kind of a move on that light of volume. And we're in treacherous waters right now. So I'm wondering what CPI is going to look like, honestly. Anyways, let's get into our sectors here. SMH, semiconductors, one of a strong sector today. That does give you the kind of the feeling that maybe the market can hold up a little bit longer. Finished with a doji above the 50 MA. We filled that gap, and that's where it stalled out. I've been telling you guys for a while that that's probably where it wants to go if it has a zigzag up. So that is now into that area. Nothing to say it can't go a little bit higher here. The Hang Seng's been kind of getting a bid lately, and that does kind of give the semiconductors a little bit of an upside. Let me just looking at the Hang Seng. Yeah, Hang Seng was decently performing last night, so I'm hanging in there. But anyway, semiconductors into that area. That 200 handle gap fill. Cloud software today, bounced off the lows again. You're barely off a double bottom, not a pattern of strength. It looks weaker than the triple Qs do even. Not a very good look. And speaking of other tech, we haven't talked about biotech in a while, but, just kind of in this channel. And again, weekly bearish inside bar. So not a good look there for biotech either. I'm seeing these kind of consolidation patterns across the board here. Another sector that is still strong is Dow Transport's up 0.75%. Been telling you guys for a while, 14,000 would be your area of major resistance. It did pull back off that area, got to 13,964, and it did bid back off of the highs, and came off the lows here, kind of like everything else towards the end of the day. But that's where it stalled out, and we'll see what it does tomorrow. Again, it did get a nice kind of zigzag up there, but this is really good weekly resistance up here. So you're going into, basically this red bar. You came down, this is where you retraced, and then you got that sell bar. There's money trapped in there. And then on the weekly, you're coming into this red bar high here. So that's where the money's trapped. So that's where your resistance is on DJT for now. Interest rates. So this is also very, very important to talk about. And this is how I know without even knowing the full story yet. This is how you know that this was completely isolated to one instance. Meaning that the dollar being down had nothing to do with the market rallying today, and the dollar didn't even really come off the lows that much towards the end of the day. And obviously the spiders were selling off pretty sharply, but bonds barely budged, and you can see gold here barely budged. So this was what TLT was doing when the spiders were doing that. So again, it was totally an isolated incident to obviously somebody jumping out the back door. And when I say isolated, I mean, like, it's going to affect everything eventually, but it wasn't due to the Fed. It wasn't due to rates. It wasn't due to upcoming CPI. It wasn't anything like that. It was definitely due to that contagion risk. So that's a word we might hear pretty soon here. It's an ugly word, contagion. So we'll see what happens here. But bonds, they are, they held up for now. This is nothing great, though. It's nothing to write home about. I mean, the trend is down. You're very close to 52-week lows. This is very close to rolling over. The 2-year, again, it held off the lows here today. It's actually getting a little bit of a bid up here in the after hours. But again, this is nothing special. It's definitely nothing to write home about. The one thing that could be bullish bonds potentially is if there is contagion risk coming up soon, bonds could bottom. And possibly, well, they will bottom before stocks. But you'll see that as essentially the bond market would be front running the Fed, because the Fed would have to come in at that point. So just be on guard for that. Let's take a look at HYG already. HYG finishing negative, and we still have that weekly bear flag there as well. So again, nothing special, nothing to write home about, but just keep that in the back of your mind moving forward. Anyways, XHB, again, inside day, nothing's changed. It's still inside of that weekly channel, weekly bear flag. ITB, same thing. VNQ, again, really just kind of sideways here. Above this trend line is bullish. For right now, I'm kind of neutral to bearish, though, on it. XLF, again, continue to be strong, up 58 basis points. We've got a lot of resistance up here in this area, but you are trying to consolidate. So, it's holding up for now. One thing that I will note, though, one of the stronger sectors in the market, broker-dealers, this was actually one of the weaker ones today. So this was down 64 basis points. And when you see that happening, and there's talk about contagion risk, margin calling, so on and so forth, and you see the broker dealers down, it's telling you these guys are in trouble. So again, that's what they mean when they say contagion. The brokers, financial institutions, those places, that's where the risk is. So obviously a little bit of concern there. Money center banks held up, so we'll kind of give it, it's a split, so we'll kind of give it the benefit of the doubt for now. But if that continues, we'll definitely need to continue to watch that moving forward. Flipping over to energy, so crude backed off of that trend line in the 100 MA. So back below the neckline. This is still fine. You just don't want to see it close below the week, below that inverse head and shoulders neckline. That would be a failed pattern. So just be aware of that. But for right now, it pulled back off the highs and it pretty much sold all day long. Did a lot of backing and filling there. It's nothing terrible, but nothing great either. I'm kind of neutral on it at the moment. As far as XLE, let's take a look at OXY. I don't know if they've, looks like they might have reported here. It's hard to tell. That's really illiquid. It doesn't look like they've reported yet. But either way, XLE, XOM finishing at all-time highs. And I talked about this last night on Twitter. If we do have a red wave, this isn't really good for energy in the short term, because a gridlocked house means Biden can't push restrictive energy policy as easily, which is bearish supply, which would be bearish XLE. But in the long term, don't get me wrong, it doesn't amount to anything. They're still going to do what they're going to do. But near term, I don't think that these energy stocks have priced that in or even thought about that. And again, it's just really a pile into the only sector that's working right now. They're getting more and more overbought, and I would be cautious with them right now. XOP there having an inside day, and OIH making new highs, but did close red here, and that is just piercing double top. Now, maybe that can get a little bit higher here, maybe even a 320 pierce, but this is so extended right now. There's no way you could convince me to go long at this level. Nat gas broke through that gap fill. I think this can go lower here. That came down with a lot of velocity. I told you guys yesterday that gap up was not going to last, and I thought that it would fill pretty quickly, which it did. There is some support around 570, though. We'll see what it does tomorrow. Again, we'll have to see how the market behaves. If we get some wild news overnight and the market gaps down, then anything can happen. But Nat gas down a whopping 10.5% and filling that gap there. So we'll continue to watch that into tomorrow. Dollar we talked about already. You're close to that 100 MA trend line right there, 109.40. Been talking about that level for how long now? So we finally got to it. We didn't quite, we basically got to it there, I guess. But we finally actually tagged it today. So I think the bigger level is just below it, right at that 100. So we'll see what it does if and when it gets into there. Gold also held up today, which shouldn't be a shocker to anybody. You know, crypto getting annihilated, equities getting hit really hard, and bonds were bidding. So TLT was up. That helped out gold a little bit, up 2% on the day. So that's getting a nice pop. Still not convinced this is out of the woods yet. So just be aware of that. But a nice bid off the lows. Silver, on the other hand, I think that has possibly put in a bottom. And that did make a daily chart higher high. It stalled out at the 200 moving average. So we'll watch on pattern for this one. But no problems there with silver. Platinum got up to that upper trend line and it did pierce it. So we'll just high of the day here at 115.8. And it's hanging out at 1,013 right now. And again, maybe it gets up to 1025, but I think it's got to do a little bit of backing and filling if and when it gets up there. So we'll continue to watch that. Copper, also a nice outside day to yesterday's candle. So that held up well. I said yesterday I didn't like that gap down. I would have preferred like an inside hammer, but today you kind of made up for it. So copper doing a decent job of getting those gains back. And you now have an inside bar on the daily time frame of copper. So we'll continue to watch that. Lastly, I mean, yeah, we talked about Bitcoin already, but if they don't save this, I just want to touch on this last. If they don't save this, that's a weekly, I mean, I've been talking about this for a while on and off. That's a big, massive weekly bear base. And it's there on the monthly as well. Monthly inside bar. Ether, same thing. So not really good looks here. They got to, I mean, they're going to have to save it now. Like you can't afford a breakdown here on any of these. So somebody's got to come in and do something about it. If they don't, this thing is probably headed down to 10,000, 12,000. If they do save it, you could have a fake breakdown and then, I mean, it would still have a lot of work to do, but if you get a fake breakdown, then it's got a puncher's chance of really igniting a squeeze here. But I don't really see that happening right now, especially with the liquidity problems in not just the crypto market, but really all across the board here. Anyways, we'll see what we do tomorrow. I think we're actually going to be sideways, maybe just kind of a chop day again. And it's going to be all eyes on CPI for the 11th month in a row. So we'll see what we get there. I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.